What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we need to take another look at this Bitcoin chart because it is very concerning. It's amazing how the charts can change the overall outlook in just a matter of 2 or 3 days, where one day it looks obvious that you have one move impending, and a few days later the chart can give you a completely different picture. So here we are on the 4-hour chart, and before I start, I want to remind you that this is absolutely not financial advice. Take everything I say with a grain of salt because I don't have a crystal ball, and I am not one to have any claims of being able to predict the market movements. I'm just calling it as I see it, like John Madden making the calls back in the good old days during the NFL, where he's just describing what he sees and giving good commentary. All right, so on the 4-hour chart here, you can see that I've got a different indicator on here. It is the Bollinger Bands. So I've turned off the MACD. We still have the stochastic, and we have the Bollinger Bands. Now, up until this point here, we can see some tightening going on with the bands during this last period of consolidation that dates back all the way to Saturday, the 21st of January. And something that I wanted to point out with the Bollinger Bands is that when you have an extended period of tightening, it usually ends with a big move. So let's just look at this whole zone here where the bands are tight. And look back in history at what happens when you have periods of time when the bands are tight, like in this one, which was a very short period. Whenever you come out of that, you usually have a big move up or a big move down. Of course, here we can see that the big move was up. After this previous one, we had a big move up. And after this breakout here, we notice that we hug the top boundary of the Bollinger Band until it breaks off right here, and then we start hugging the top again. We come all the way down to the bottom of the band, and then it bounced back up to the middle and took off after this period of tightening. So one thing we know for sure is that when we emerge from this, it's going to be a big move up or it's going to be a big move down, because we have been in this tight period for quite some time. Okay, let's see if we can scrunch in this a little bit more so we can see how long this period was before. See, this one went on from the 19th of December all the way until the 11th of January before it blew up and rode the top boundary of the band. See that? And then it breaks off. It consolidated. Then it popped off again. You see the bands widen. You have a little balloon effect, and it rides the top boundary of the band again. And then we have a long period of consolidation here. So once it touches the upper or lower boundary, we know what direction this breakout is going to be. Right now, it's still at the middle. We had a wick up, but it's come back down. So it's looking kind of bullish now. But we have not touched and stuck and poked through this upper band boundary. Now, before we poked through it here, but then it broke off. It touched it again with a red candle and came back down to the middle. So it did not break out. Like here, you had a candle close above the upper limit of the Bollinger Bands. And then that's when it just rides on through and has a strong move up. Same thing here on the second touch. This candle closed above the boundary, and then it did it several times and rode it up. Now, looking at the one-day chart, on the last video, I was very bearish, thinking we were going to have a major drop. And that's why I issued that warning. And it could be that I was dead wrong. And I'll show you why. Here's the thing. After this strong move up where we rode the upper limit of the Bollinger Bands here on the one-day chart, it peeled back and we're back in the middle, sitting right here at the 50 EMA line. Here we're fooling around right there at the 50 EMA, okay? And the 200 EMA is very quickly kind of catching up there. It's kind of looking pretty bullish too. But what's going to happen here? Actually, here's the 200 EMA. It was negatively sailing downward, and now it's starting to move up after this strong move pulled it up. But we're sitting at the 50. Now, we'll either correct back down towards this 200, or we're going to touch on the purple dash line and then possibly violate the upper boundary of this Bollinger Band here. So if we close a few candles above the boundary of this line, I'm thinking we could be due for a major pop. So that's what I'm looking for. If it goes through, we could have another strong move upward. And the only thing against that is we've had a strong move and they usually don't come back to back. But what concerns me is the stochastic. Now, I always teach you to look at the return on price that you get for stochastic moves. What does that mean? That means that we look at the peaks. Let's just circle some high points here. There was a high, and then we had a lower high here, and then we had somewhat of a peak here, and now we got this action happening right here. So then we look downstairs at where the positioning of the stochastic was. This is a stochastic peak, coincided with that move. The next one didn't give too much of a bang for the buck. The next one was a higher high, but it didn't take out the previous higher high, okay? This one definitely did not give a good return for a peak here. That was a definite lower high. But now this one gave a strong return for the peak. Let's just put a rectangle around it. This entire area here coincided with this strong move. So when we look upstairs at the return on investment each time we got a peak, it was a strong high move. Now, the same goes for the stochastic lows. What happened during the low points? Let's just look at it. Here we have a low here, a low here, and a low here, and then we have an impending low coming because it looks like this blue fast line is starting to curl over. Now, at this low point, we had a lower low. At this low point, it was just side banding. That's not too exciting. At this low, it coincides with the big dip at the bottom of the market when we went all the way down to 16,000, 15,000. At this peak, it was just side banding, but a higher high. And now, look at this. We came all the way down on this stochastic where I thought price was really going to sail down, but it didn't. All we got was this little bitty move down right here. That's concerning. So if we jump all the way down and get into oversold and price is still fooling around above this 200 EMA line right here, once we come out of that and we round up for that next surge, this surge on the stochastic cycle, if it holds and doesn't double down and fake us out, it could fuel a big move upward where we break out of that Bollinger Band. Now, how far will it go? We hear people talking 25,000, and I don't see the evidence for that. Because again, when we scrunch this down, let's just scrunch it down. Do you see a volume node at 25,000? I don't. I don't know what people are talking about. Okay. All I see is this volume node here above the black dash line. So if we get a strong move, it's very possible we could sail above the black dash line and be at 30,000 again. It's very possible. I don't think 25,000 is a stopping point. If we make it to 25,000, it's going to 30. Okay. And at 30, we would date back all the way to June for the previous high, and we're going to need to take that out. So in my opinion, we're not calling a bull market until we take out this action of this consolidation in June, in May and June. If we take that out, yeah, we're probably going to start the next cycle. I'll have to just go with it because, it's on the chart. If we don't, I don't think the bear market's over. Now, what else is possible? We could get a fake out. So let's say we make it down here and it looks like this is going to turn, but then it does a head fake like that. And we've seen this happen here, where here we had a turn and it came up and went back down again. Then we had another fake out here. It turned up, went back down again. Look at this fake out. We're at the bottom. It starts to move up, and then we had several fake outs where it went back down. So it is possible. It's not a definite that this is the completion of this cycle and we're going to move up. So if we do get a fake out, well, by golly, we could mess around and consolidate and then go back down towards the red dashed line. Now, if we do go to the red dashed line, that's going to probably confirm the completion of the bear market, where we could go back down towards the black dotted line of death, or this could be the bottom here. And we'll have to wait and see, because right now I'm starting to lose hope that we go down to 11,000, even though the golden fib retrace line is still sitting at 11,000. It doesn't mean, though, that we have to go there. So if we go back to this 1 week chart, we can see it on here. I've still got it there. Here's the, let's see, here's our fib lines. And there's the golden fib retrace, the golden 618. It sits down here at 11,000. So it's there, but it doesn't mean it's going to happen. Now, the only reason why I'm still not convinced that we're going to blow back up to 30,000 before we capitulate is this stochastic right here. This is nasty. There's a crossover, okay? And we had this straight up move. This is ridiculous. We just plowed straight on up to this crossover point. And since we're still in an overall bear market, and since we touched at the top of the Bollinger Bands on the 1 week chart, we're at the limit. Usually what happens is you bounce to the other line, the other limit, which would be way downstairs, okay? That's why I'm waiting and watching. Do I know what's going to happen for sure? No, I don't, but I'm skeptical. I'm very skeptical, and this doesn't look good to me. That crossover is looking like it's going to happen, okay? So we must wait and watch. It's a game of waiting and watching. The alts are going bananas. I wish I could have bought at the last peak down here before all this happened, which just took the alts and blew them straight up in the air. But oh well. If we get another correction, my game plan is clear. If we get anywhere down to the red dash line or below, that's when I'm going to start loading up. Anywhere near here, that's where accumulation, DCA, that's where I start to pick everything up. I'm going to get more Matic. I'm going to get some AGIX, get more Telcoin, Flux, KDA, and I'll probably pick up a bag of Solana, because now I think Solana is going to make it. Please bring Litecoin down, because now I'm a believer in Litecoin. For whatever reason, the big institutional investors are liking it, and it has shown a very strong move to 100, where it sits right now. So that's all I wanted to do, is let you know that since the last video, there's cracks in the wall, and I could be wrong, but the 1 week chart still has me bearish. And that's it. That's my prognosis. Post in the comments, what do you think? Are we going to 30,000 first before a correction, or is it going to happen in the next few days? One other thing that could lend to the correction is the fact that we had a positive jobs report, and the economy is looking like it's strong. Now, the feds want to control the interest or control inflation. So are they going to continue to be soft and just have these nice little 25 basis point increases? Or are they going to say, uh-oh, stock market, crypto market, everything's going to fly, job market is flying, people have more money and they're going to spend it, which means inflation is going to get driven higher. They're going to say, nope, we're going to whack that down because we got to get inflation under control. And if they do, that could cause them to raise rates higher than what we're thinking and correct this entire thing and slap it down so they can get inflation under control. Because honest to God, folks, inflation is way out of control. They're not including all of the stuff that they should, like food and eggs and gas and everything else. That's why I call the CPI the CP lie. It's a big fat lie. If they included everything that is hurting us regular people, then the inflation rate that they'd be reporting would be a whole lot higher than what they're telling us. They know the truth. They just lie to us and give us the CP lie to make it look good. But you better believe they're considering it, and that they might raise rates in order to get these egg prices under control. Think about that. That's all I got for now, but I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you would like to be one of the very special people that contributes, you may do so by use of a super thanks to help me defray the cost of producing these videos for you. So we will keep our eyes on this, And I will be back very soon once we have a pivot point on BTC and know which way it's going to go. And that's what we're going to have to wait and watch for. This is Carlton, and I am out.